Most traders and investors thought September would be negative. As it turns out, in US election years, it's October that we need to be paying attention to. And with massive dark pool transactions, some of the highest we've ever seen recorded at the peaks, today we need to talk about the S&P and NASDAQ. Meanwhile, around the world, short squeezes are bankrupting some big hedge funds, and it looks like that might get worse before it gets better. But could it actually be a little secret liquidity injection that we need to be paying attention to when it comes to some of the biggest asset classes in the world? In today's video, we take a look at what's in store for stocks, commodities, and cryptos for the week ahead. Join us, guys. This is going to be a big one. Well, welcome back everybody to the special weekend edition of The Daily Show, and what a week it's been. Short squeezes, gamma moves on Tesla, as we've talked about, and of course some huge ones on metals, which we'll go into in today's session. It's been a good time to be trading in markets, and it may just be getting better into the back end of 2024. So make sure to subscribe and smash that like button if it's your first time here and you want to learn more about markets. Also, a quick reminder, make sure to sign up for the VIP free weekly newsletter. We're putting out a special report after the Monday close that will have quite a lot of extra charts only for people that are signing up there. So make sure to do it. Links in the pinned comment. Let's go through sentiment reports because, guys, things are starting to heat up here. We're basically seeing some massive amounts of greed coming back into the markets. And this is transacting right at the end of a window dressing period, effectively a point at the end of the quarter where everyone's trying to get their bonuses. And it looks like bonuses might be pretty good this year because, of course, Wall Street's been doing all right thanks to the very bullish market. Now that we know that we're up there in the bull end, what else should we be looking at? Well, of course, it's the bull-bear spread. And we brought this up in one of our previous videos. And at the moment, again, everything's starting to point more towards the dangerous zone of 30%. In previous periods when we've seen the bull-bear spread up in these zones, we've seen temporary pullbacks. And I do think I want to reiterate that it may be just a temporary pullback. Some of the stats and data that we've shared over the last month all point towards pullbacks being met by bull demand because the thrusts, the money on the side, breadth, everything else, again, it doesn't look like this is going to follow the recession path for now. We keep an open mind, though, to all of the scenarios. And as we've said, market structure is going to show us the way, and then we'll use our flow destinations to basically figure out where the hell it's going to. All right, let's talk S&P 500 for October because, yes, we usually do see sell-offs, and these sell-offs can get kind of brutal during this year. And remember, the funny thing about it is we're coming into this with a lot of FOMO, a lot of greed into the month of October, which means we need to start being possibly a little fearful. What about sentiment reports from people like Goldman Sachs? Well, we're not quite at where we were before the sell-off earlier in 2024, which obviously was that one in August, and we knew that the sentiment positioning was quite stretchy, but it's starting to get up there, and again, it's worthwhile paying attention to. Some people that are looking at maybe bear busts right now should maybe take a snapshot of this screen though. Consumer optimism indices, you'll notice that we're not anywhere near as high as we've been historically before recessionary periods. And that's something to be, really paying attention to. Now you might say, well, Tom, we're coming off a high and then we're going into the recession and we just don't know it's there yet. But yeah, consumer optimism certainly dropping like a rock as we're getting up into these periods. And again, that could be a good sign if you're looking at dips and the market structure improves. Let's talk about why it's a good sign. September, if it's a positive month, we have one more trade day left on it. If it stays this way, we will now have 8 of 9 months of 2024 up. And this is actually not that common. In fact, the years that follow, if you have a look here at forward returns in terms of 12-month returns, are very, very good. September 17, negative 6.2%, that's the outlier, but all of the rest, guess what? More of the same of what we've been seeing recently. The thrust, the 70 thrust, the Whaley Brett thrust, and all of these other reads that we've had in recent times are still pointing towards this market being in what we call late cycle, which is basically a period where people get very exuberant and they get very excited. And that's where it comes back to margin. Now, we already know that margin debt, and we've already reported on this, actually dropped during the month of August. And this is a very important point because if it's continuing to rise up and we're getting back to 2021 highs, then we should be frankly scared because basically that is peak FOMO and everyone's on debt and leverage into these markets. Well, because it dropped, there could be still room to grow. And these will be one of the most important reads, one of the actual reads that we use. I use a slightly different methodology behind it, but even here you can see FundStrat's Tom Lee is using the same stuff. So you got to be paying attention to this FINRA margin debt. And I agree with him. It's a massive critical feature of whether you're actually done with the bull run or not. So again, as this has dropped, as we're going into potentially a period of volatility, it could be seen as an opportunity. This week's all important because, of course, people are going to be coming through and saying, well, what about the jobs numbers? The economy's weakening, we might need more rate cuts. Well, one thing's pretty clear is that because we have non-farm payrolls, which for anyone that doesn't know is the unemployment figures that come out every first week calendar week of the month, is one of the most important data reads. This is now expected to be around 240,000 in terms of jobs. And do remember, when this comes through, people will be doing a lot of modeling. So this is going to change everything to do with the yield curve. So how many cuts is the Federal Reserve going to do? Will we get another 50 basis point cut in November? All this speculation that the market is having, that will culminate most likely into this jobs number, which is now the most important number of the month once again, because the jobs and the mandate, remember the dual party mandate of the Federal Reserve, is now wholly focused on the jobs numbers. Goldman Sachs now believes that 2025 could be a bit of a Ponzi year. They're actually upgrading the estimates in terms of how many buyback share companies are going to be doing. This is, of course, helpful to keeping the prices up. So it's another kind of windfall, I guess, for the bulls in terms of dips. Now let's talk about overextended areas. So this is one of the big ones here. The materials sector is now above 96% of stocks are now above the 50-day EMA. And of course, that means they're pushing the upper Bollinger Band areas of the markets. Now, of course, if you're buying down here, you're feeling pretty good about it. If you're buying up here, you might be saying, well, hold on a second, is this really a great purchase? It doesn't mean an instantaneous sell, as we often say, we need price action, but ultimately it is something to keep in mind. A lot of people have jumped into that aspect. Let's also now talk China for a second, because it is pretty clear, and you can see here from Walter Bloomberg over on X, that quant funds, hedge funds in particular, they got trapped in a short squeeze after a China glitch, but more importantly, after China's stimulus came through. And we know, because of course we reported in one of our previous videos, go check that out 2 videos back, that the short squeeze in China was significant. The most shorted market that we'd had in like years. So the most shorted market we'd had in years, and all of a sudden everyone starts buying it, it's going to feed upon itself. And that's why it's been such an aggressive move. Now we do see, I believe, a bit of a holiday period here in the markets coming in through China. So you've got to be a little bit more careful in terms of the liquidity this week. But the reason why there is more potential room to go up has to do with multiples. Take a look here at how cheap China was really trading. And there are reasons, of course, there are always reasons, but we were trading basically on the bottom Bollinger Band sides here. And Mike Zaccardi over on X shared this Yardeni chart, which basically shows you that we're trading at around 10x. So imagine if you're thinking about it, we're trading 21x plus on the S&P. Well, basically China is half the price, and even then some. And this is why some people like Michael Burry and others are believing that it could have decent opportunity in it. Of course, it's one of the reasons why we on the channel have also liked it, but specifically what we've been looking at is base formation bottoms. So remember, we're letting the price action, we're letting the market structure, and more importantly, the flows show us the way. We're not listening to the rhetoric, we're not listening to the crap that's out there that will absolutely destroy your mind when it comes to trading and investing. We're paying attention to the things that actually matter. And now when we're talking about things that actually matter, let's talk Bitcoin, because yes, I know a lot of you are like, why are you talking Bitcoin all of a sudden? Well, as you know, we always cover Bitcoin here on the channel, so crypto fan girls and fanboys, you do get a bit of coverage here, but sometimes there's points when it's very interesting to know about Bitcoin. And right now, Bitcoin could be seeing a bit of a windfall when it comes to catch up, playing catch up with the rest of the market. We're seeing central bank liquidity, big four central bank balance sheets starting to uptick again. And this is what I was getting at the start of the video today. When we get these balance sheets going up, it can be a bit of a windfall specifically for certain stocks and markets. Sometimes gold, definitely Bitcoin does benefit from it. And this makes a lot of sense because it looks like we're going to end September as a bullish period for Bitcoin. And we know that when you end bullish when it comes to 2024, there's only been 1, 2, and 3 other times that's happened. And guess what? October, November, and December have all been positive. Will it happen again this way? Hey, it might. The data is certainly very, very good, but ultimately the price action has also started to improve. And of course, if we break through 68,000, which we'll look at in a moment, that will become important. Now, I posted over on X the cup and handle, or I like to call it the coffee mug. So basically, we've got a coffee mug set up, and this is one that I guess doesn't meet the technical boundaries of a coffee mug setup. Now, why is this? Because it's a little bit long. So in terms of the distance, it's coming from 2022 all the way to 2024. If you actually look at the people that created this type of stuff, basically it's a bit too long. They say that it should be in a shorter period of time. But regardless of whether you think it's a coffee mug, a cup of handle, whatever you want to call it, it is a period of consolidation, and that is for sure, because this handle looks very flag-like. So I don't really care about patterns so much. What I'm actually interested in is I'm interested in a consolidation with momentum and flow coming out of it. Remember, people get very caught up in a particular pattern instead of really thinking, what is going on in this chart? Does this show me flow momentum? Does this show me what I should be really looking at, rather than just calling it by a cool name? Well, I think it does. We'll look at that soon on the charts. Now let's talk dark pool activity. And these are big. Largest clusters ever recorded in the last 2 years on IVV. Now that's of course a SPY ETF, and it's all at the peak. I'm starting to say, well, we need to be really careful about this, because of course the last time we saw this, we had very similar reads on the market, and these ones are bigger. So these ones are bigger and more clusters at the peak. It does look like some people are locking in a bit of profits to get that sweet bonus. And of course, we're seeing Vanguard SPF, SP 500 also coming under pressure, which was that big phantom print that we had the other day. So what's happening here is basically we're seeing consolidation at the peaks, we're seeing overbought potential signals, and we just need to be cautious about whether this is what we call a pit, a pullback in time, or whether it's something a little bit different. Have a look here as well at gold. Now, if you know this channel and you've been watching for a while, you know I love gold, and I am a massive fan for gold into 3,000, and that hasn't changed. I think gold's going to do damn well. But large trades coming through here, the iShares Gold Trust, and the last time we saw that was at the bottom before the rip, and now we're getting it again over here. So we had that August rip period. What a beautiful trade. I think they may have done some take profiting. And because they're take profiting here, what that's telling us is we might go into a period of consolidation. And it kind of makes sense, because remember, Bitcoin people believe gold kind of sucks, and gold people believe often Bitcoin kind of sucks. So what often happens is one runs and then they say, told you so. You know, some of you out there have done this before. And it does look like Bitcoin, of course, has been lagging. Gold's been doing well, and everyone's saying, see, gold's the king. And in this case, maybe it's about to go into consolidation. So something to keep an eye on anyway. Still very bullish on it on the medium long term, but maybe it's going to have a few weeks or maybe even just a few days of consolidation here. Let's move over to how the markets have been trading. So GDX, gold stocks, obviously dropped 3%, so that's pretty significant. Price action went down there. And we had kind of like a smattering across the board on Friday of growth and risk and stuff. XME up 6.33% in terms of overall the last 5 sessions. So that's a very strong run. And we know that because, of course, metals and mining has been one of the sectors we've focused on here for 2 weeks. And KRE now putting in 3% negative over that period. So something to watch as well. Let's go to S&P 500 before we look at the options flows. And we've now got a star, which I don't usually like. So basically this is telling me that, again, we're in either a very large period of consolidation or there's more chance to the downside than upside. Now, of course, I do think it's temporary. We've talked about this before. And some levels to watch out for if it does drop down is 5,600, 5,620, and of course then the 54, 5,500 level. This is still not showing us, though, that it's activated towards the short end. So what I often like to do is I like to look for that evidence. And we've got, of course, sentiment reports starting to come through. We're remained bullish in terms of price action. It's not like we're getting delta flows that are super negative across the board here on the S&P, but we will be paying attention. When we go to the US 500 futures, I've updated the options high-low levels for you guys, and I've put in here, could we be seeing something like a 57.11 being a switch point for the market towards the downside? Well, we do know that some of our VWAP work has actually now hit into the 5600. So if the market does hold up here and then start to fall through and give us some negative movement, again, it makes sense that 5600 to 5620 would probably be where the initial dip buys would be. And that wouldn't be that actual biggest sell. That would only be, let's mark it out from here, about 2%. So just a 2% drop off there, then the possibility of another 3% after that if markets really start getting into it. Now, why do we need to be paying attention to the options more than anything else? We'll have a look here at this week's start, 57.50. It is just ridiculously stacked with calls, and I can't see that the market's going to want to let this get through. Now, we do know that if it gets through, what is it, guys? Well, it's positive gamma. So the markets will start to really fly up potentially as they feed upon themselves. But in this case, we just know 57.50, whether it's the Monday session or the Tuesday session, that's the big stacked call level. So we'll have to pay attention there. And I do think that it's going to act as some fairly strong resistance to the markets unless they want to continue to be ballistic. For people that are holding medium and longer term, I don't really think there's too much to be scared about in these markets, but I do think there's a chance here that a dip will come because everyone expected in September, and now I'm seeing a lot of people poo-poo October being volatile. It's the number one VIX vol of the year in terms of general speaking. I don't think it will be this year, but of course it does have the data and history behind it. Let's now go S&P here with CTAs. They actually dropped the position at the highs. Now this is interesting because of course they're delayed. So this is actually shown off a very small move to the downside. And all of a sudden they start dropping positions up there. Another little bit of a what's going on here kind of moment. Tesla, very good guys, 260 being reached. Of course, we know that was the call wall for last week. And if 260 is broken through, 270 becomes open. And then, of course, 280 potentially becomes open. Now, it's the event, I believe, that's really running that particular stock. So I think it could be a buy the rumor, sell the fact. I asked you guys, and a lot of you did think that was the possibility there. When it comes to NVIDIA, NVIDIA's now got a 130 call wall on it, and 125 remains still a big zone. So NVIDIA hit 125, which was the biggest level last week, and it's remaining in what I would say a decent consolidation. Let's now have a look at the charts and go through some of the most important lead indicators of the economy right now. Consumer discretionary versus staples. Look at the improvement since especially the FOMC meeting here. And this is showing you liquidity is being injected back into the market. Again, the Chinese news is big news here. And this is all helping, and it already started well before this. This is all helping to show that it's shoring up the markets at this point. Now, this still shows late cycle. So basically, when we're stuck in a range like this, it's not a great time to be super levered if you're a longer term holder. But yeah, it is showing us that there's some consolidation there, and therefore we need to be paying attention to that. High yield junk bonds, they're still on the rise. Again, this shows you that people are not fearful in markets. High yield junk going up, usually a good sign for growth and taking on a little bit of risk by the street. Not that we all should be taking the same amount of risk, but they will be starting to look at that. US dollar, yeah, it's going to be the week of the US dollar. Non-farm payrolls, it may just sit around doing nothing. 99.50 seems more likely now that we fell underneath that last bulls level. And you can see here the anchored VWAP and the daily 20 moving average keep it down. They're basically keeping it in the short end, not, of course, any buyers aren't able to get through. Will we see some relaxation on the metals? Well, I think we might. Copper hit the mega take profit zone of 4.66. I've got to say congratulations, guys. This was a very well done trade. And I say that, yeah, okay, we did it together. But at the same time, I actually say that because no one else was doing it. And that's pretty cool. You know, when you're doing positions that other people aren't doing, such as China, now they're all doing it. Oh yeah, I said this. Yeah, did they really hold true and keep talking about it during the structural lows? I doubt it. So you've got to remember that's a very important factor. And on copper, you've seen that kind of move. Copper is mostly trash, but sometimes it's good to trade it. And I think that's the point. You know, some people get very angry about covering Bitcoin because they don't like it or they think it's worth nothing. If it's actually a point where crypto is worthwhile, you know, covering, of course, there is money to be made. And regardless of your feelings towards anything, trading is trading. It has to be motionless. When it comes to investing, yeah, if you don't believe in Bitcoin, you shouldn't invest in it. Why? Because you have the weakest hands you've ever seen, and it'll drop like 20% in one day at some point, and you'll be like, oh, you'll panic and you'll drop it all and you'll just lose because you are weak-minded on that particular instrument because you don't believe in it. You might believe in Tesla. Remember, invest in what you believe in. Trade anything without feelings. And if you love something, you probably shouldn't trade it, frankly. I say that to a lot of people. Let's go over here to iron ore because you're completely biased. Iron ore, big breakout. Again, I think I might pull back here after hitting into this mega supply, which is over here, which we've already seen in reaction. But what a close. I love that close. I think this marks significant change for China, and that is a huge deal for economic stimulus across the world. Gold also showing us signs of potentially weakening off here in the top, might consolidate for a bit, makes sense with that big dark pool transaction. What about silver? Well, silver also struggled to close at above the 32 kind of 15. I do like silver a little bit more than gold at the moment from a pure trade / percentage perspective. It's still a very significant good close up, but I wouldn't be surprised to see, actually silver could even keep going. Well, it's possible, but consolidation may be there. There's no new entries to be made, I don't think, on silver. If you're in it, I wouldn't be too scared, but it did hit that big TP zone. US oil bounced a little bit. This is still not up enough. We're going to cover this in our next video, and at the moment I'm just looking for structure, but at the moment I would like it above 70.1, and if it did get above that a barrel, I think it would be bullish again. But you've got to be careful here because of course it's trying to form a base on a massive sell-off that has occurred. Tesla ends at 260. We know 260 is big. 260 leads to 270, it leads to 280, and that will complete a inverse head and shoulders. And this one's running off speculation into the 10-10 event. So that's really what that trade is. When we move over to something like NVDA, you'll notice it hits the resistance, sells off a little bit, kind of still, I would say, a bit choppy, looks a bit consolidatory. A lot of people are kind of drawing all sorts of lines. So they're kind of drawing highs and saying, oh, it's going into a pennant or something or a wedge. I don't really think about that too much. Yes, we're seeing consolidation. We're being pretty good on NVIDIA. If it does break these highs, of course, 130 plus, it could go ballistic. So certainly set an alert for up there, and that's something you'll want to do. So I'll set a little alert here for 132 in the future, just in case, so you guys can see that and see how it plays out. But yeah, it's, I think, consolidating, maybe even in the end, sell off a little bit there. HSI, very strong close. Wow, 20,600. Now, this again could weaken a little bit this week just because it's been such a huge run, but that's a squeeze, and that's exactly what happens. You've got to remember, this is what China does. Like, let's just do this percentage. Look at the left-hand side, 53%. So it does it pretty quick. It doesn't take long for everyone to get on board in this world that we're in now. And yeah, that's a lot of funds getting absolutely mutilated on the short squeeze and having to buy back in. So we all know how that works, and HSI to now, I think it's still going to find a lot more strength in the future, but get ready for it to be, relatively volatile. Aussie 200 market, again, benefiting from everything we've spoken about at the moment. It closes the week very strongly because, of course, that's the all-time high close. So yeah, nice work, breaking out, still consistently up. US 2000, so this is the Russell 2000. It's still struggling around 22, kind of 60. I think it's showing some signs of weakness. I'm not really too much on the Russell at the moment. I want to see a breakout past this point, and then we go 2430-ish, and that will be probably one of the better upsides in the next couple of months. What about the Qs? Well, I left it here on the Qs before we go to the NASDAQ. There are gap fills left. So, of course, we've got a big gap at 471. We've seen a sell after going through the high, and this is a great sign for bulls, actually, because what it's showing you is the market's prepared to potentially take this high later, and I would like that type of thing to happen. And we've actually mentioned this many times on the channel as what we'd like it to do, and it seems to be doing kind of what we like it to do. So that is go rally, pull in the money, sell off a little bit, and then ideally rally again. So fairly important point, didn't quite get to 20,400, which is what I would have expected, but it has now shown a little bit of weakness up here at the top, and that may continue down to 19.4 on the NASDAQ. Now let's talk US dollar versus Bitcoin, because of course Bitcoin is starting to really heat up. Now, of course, there's the coffee mug, but if we go over here and we have a look at the smaller time frames, and we'll get rid of this yellow line here, Basically, we're seeing a series of higher highs and higher lows. We go to the daily, you can again see it breached out past 64.5, which we know is good. And now we're contending with probably what most people have on their charts at the moment, which is this trend line on the way down. And of course, the all important 68,000, 69,000 zone. If we manage to break above that in the future, well, you know people are going to get excited and flows are going to keep going up. Why? Because it will change trend. It'll actually say, you know what, I'm not weak anymore. I'm strong, I'm going higher. Well, let's see if we can get near that $100,000 level and mark. For now, I think it looks pretty good. A little bit of a pullback here in time, so a little bit of consolidation, breached out, and that made us start to think, of course, that we're going to be pushing that 68,000. So Bitcoin moving up, it could do this against the market as well at the same time. So it's going to be a very interesting October for that flow. Now let's go and have a look at what we've got going forward. So as you can see here, we've got Chinese bank holidays coming through this week. There are a few bits of news, but the main thing is that China liquidity is obviously going to be off the table, and it's going to be non-farm payrolls on Friday and the PMI on Thursday that most people are going to talk about. So non-farms is the most important number. We'll find out whether those little weird predictions that people have is possible. But generally speaking, this is going to change the yield curve, and when it changes the yield curve, it's going to change the market. So expect quite a lot of volatility and potential moves off that. If you enjoyed today's video, please remember to subscribe, smash that like button. You have a fantastic weekend, and remember as well, sign up for the free weekly newsletter. And also for the Australians out there, come to the Sydney event because it's going to be awesome to see you guys there. Melbourne event, it's basically late closed now. So if you sign up, again, might be able to fill you in if someone drops out. Do it anyway. But yeah, Sydney event, still filling up. We just announced it, October 30th, totally free. Love to meet you there. You should come along and yeah, join in with the trading community. And of course, investment. We're going through a 12-month thought process in the future. It's going to be a lot of fun. Bye, guys.